It feels every time we have you here, we talk about Evergrande, yet we're nowhere near a resolution to this. But we're closer, aren't we?
Yes, we are. I think the company put out some proposals, and that's being negotiated. I think this recurring news story is just the fact that the company is making effort, and the investors are considering what to do next. And the bottom line is that the market appears to have hit bottom in terms of the physical market, and that has given a ray of hope to both the companies as well as the creditors in terms of resolution of a lot of cases that they weren't able to resolve last year.
I mean, what will this restructuring do? How will the company look? And, what about the bonds which have been issued as well? What are we talking about there? Is there going to be how many cents on the dollar for those? And, there's so many things open. What about equity swaps here as well?
Well, so far, in most cases, the companies or the investors are preferring not to do equity swaps or not to take haircuts on the bonds. So far, the preferred option is to stretch out the time frame, and deferrals are going into 10 plus years. So at the end of the day, what it needs to look like is a sustainable capital structure given the current condition of the market. Now, as you know, the physical property market has changed. A lot of the investment demand has been squeezed out, so now it's much more of a fundamental demand-driven market. As such, the growth rate is going to be much slower than before. And given that context, the companies have to think about how much cash flow they can generate over the longer term and figure out what they can pay given that cash generation. So I think at the end of the day, what we need to be able to get to is a sustainable capital structure.
And what does that kind of framework for restructuring look like to you now, Charles? I mean, what sort of recovery rate are we expecting? And when realistically can investors get their money back? So historically, recovery rate for offshore restructuring is somewhere around, say 20 to 40%, so somewhere in that range. And I think for most companies, that final number may differ depending on what options they take. Now, how long would it take for them to get their money back? It depends on the terms of the deal. But the bottom line is that investors will have to accept that time frame, whatever it is that they agree to, and the delayed payments that will come under extended maturities is something that that at the end of the day they find acceptable. So anywhere from 5 to 10 years is kind of the deferral period or the extension period that we're looking at for a lot of these deals. So I would expect to kind of see that coming up in more and more cases.